Hello everyone, this is Tushita Berry and today we are delving into a detailed analysis of Abbvie Inc, a global pharmaceutical company at the forefront of innovation in healthcare. We will go over the company's history, its financials, going over their financial ratios, the MD&A section, and also see if Abbvie is a good company to invest. Now let's dive into the essence of Abbvie. Established in 2013, Abbvie has swiftly become a leader in the biopharmaceutical realm. With a robust presence in over 170 countries, their mission is crystal clear. Abbvie's commitment goes beyond the ordinary. They stand at the forefront tackling some of the world's most complex and serious diseases. From cancer to immune-mediated diseases and neurological conditions, none of this would be possible without their incredible team. They have over 47,000 workers passionately working to transform scientific breakthroughs into life-changing medicines. The collaborative spirit with Abbvie, combined with the dedicated to innovation, ensures that they are not just a part of the pharmaceutical landscape, but are shaping its future. Looking at the company's history after its establishment, Abbvie was born as a spin-off from Abbott Laboratories. This strategic move allowed Abbvie to focus its energy and expertise solely on pharmaceuticals, setting the stage for a transformative journey. Abbvie hit the ground running with an extraordinary debut in financial realm. In its first year, the company achieved a revenue milestone of $18.8 billion, making it the largest IPO in history. The company's commitment to excellence is evident in its continuous expansion of product portfolio. In 2018, Abbvie achieved an esteemed position in the pharmaceutical industry by securing the #1 spot on Fortune's World's Most Admired Companies list. In 2013, Abbvie embarked on a transformative journey, breaking free as an independent entity. This pivotal moment marked an inspection of a new era. Fast forward to 2015, a year that saw Abbvie make strategic moves to reinforce its commitment to fighting diseases. The acquisition of pharmaceuticals was a game changer. This strategic move significantly strengthened Abbvie's position in the oncology landscape. In 2020, Abbvie continued its strategic growth trajectory within the completion of the acquisition of Allergan. This move wasn't just about expanding its portfolio, it was about broadening horizons and enhancing the pipelines of products. Today, Abbvie stands as a global force, extending its impact to more than 175 countries. The company's influence isn't just geographical, it's reflected in the diversity of its pipeline. Now let's shift our focus to the financials. We will be conducting a horizontal analysis of Abbvie's Inc balance sheet, comparing key metrics from one year to next. This will shed light on the company's involvement financial position. So what exactly is horizon analysis? At its core, it's a financial analysis technique that reveals changes in the company's financial position across different periods. It's like turning the pages of a financial storybook, allowing us to track the evolution of a company's performance. Let's begin with the lifeblood of any organization: cash and short-term investments. The company has experienced changes in its liquidity positions with a decrease in cash and short-term investments. There was a positive trend in receivable and inventory management, indicating potential improvements in sale and operational efficiency. There was some fluctuations in long-term assets, suggesting strategic shifts in investment and changes in asset values. While total asset decreased, it's essential to delve into specific categories to understand the underlying dynamics. Moving on to the liabilities and equity side of the balance sheet, the overall total current liabilities decreased by 16%, showcasing varied trends with a significant increase in accrued expenses. The total common equity was increased by 11.98%, displaying a positive trend with increased retained earnings and reduced treasury stock. Now let's quickly highlight the key differences in the Abbvie's financial structure over the last 4 years. Abbvie asset landscape has undergone notable changes from 2019 to 2022. In the short term, there's a decline in cash and short-term investments coupled with an increase in account receivables. Current assets showcase a rise in inventory and prepaid expenses, but a decrease in other current assets. Long-term overall, there's a decrease in total assets, signifying the dynamic adjustments in Abbvie's asset structure over the past 4 years. There was a noticeable increase in account payables and accrued expenses reflecting higher financial obligations. Overall, these changes reflect Abbvie's strategic financial management and its effort to optimize its financial structure for sustainable growth and profitability. Abbvie has demonstrated impressive financial results over the years, with substantial growth in revenue, improved profitability, and effective cost management. Abbvie's net revenue witnessed substantial growth, reaching $58.5 billion in 2022. Notable progression with a 37.6% increase from 2020 to 2021, reflecting strong performance market. Net earnings increased to $11.585 billion in 2022, showcasing robust financial performance. There was a significant growth of 149.87% from 2021, highlighting the company's profitability. Abbvie's income statement reveals a positive trajectory in key financial indicators over the past 3 years. As also we've seen in the previous slide, the net revenue experienced a steady growth, reaching $58.5 billion in 2022. The company demonstrated effective cost management, as seen in the slight decrease in the cost of products sold, and Abbvie's financial performance remains resilient, affirming its commitment to innovation and meeting patients' need. Now let's talk about the component percentage balance sheet. What exactly is it? A component percentage balance sheet is a variation of a traditional balance sheet that represents each item as a percentage of the total assets. Abbvie's component percentage balance sheet shows us the distribution of its asset, liabilities, and equity, emphasizing the promotion of different categories. The balance between current and long-term assets provides a snapshot of Abbvie's financial health and allocation of resources essential for stakeholders to assess the company's strategic positioning. As shown in the component percentage balance sheet, the largest proportions of assets are in property, plant, and equipment, reflecting the company's investment in research and development. Unlike the traditional balance sheet, where assets are listed in order of liquidity, the component percentage balance sheet provides a more accurate percentage of company's asset allocation. This format also allows stakeholders to compare the variations in the distribution of assets over time, providing insights into the company's growth and investment decisions. The component percentage income statement breaks down for the company's income into key components, providing a deeper understanding of the company's financial performance. The key components include sales, cost of goods sold, gross profit, operating expense, and net income. This statement is also useful for analyzing the drivers of profitability and in identifying areas for improvement. For Abbvie, we may see that the sales contribute to the 100% of income, showing strong performance in generating revenues. Gross profit margin stands at 70%, indicating efficient management of production costs. The net income margin is at 20%, reflecting the company's ability to generate profits after all expenses. Abbvie's strong overall performance is a reflection in its high net income margin compared to the industry average of 8%. Now let's delve into Abbvie's financial health by examining key ratios that provide insights into the company's performance, starting with current ratio, which measures the company's ability to meet its short-term debt obligations. Abbvie's current ratio increased from 0.796 to 0.963 in 2022, indicating a significant improvement in liquidity. Moving on to the debt-to-equity ratio, a metric that assesses a company's financial leverage, Abbvie ratio decreased from 4.9 to 3.66 in 2022 and currently stands at 5.02. This signals a decrease in financial risk, showcasing a more conservative approach to capital structure. Next up is the gross profit margin, a key profitability indicator. Abbvie gross profit margin decreased from 70% to 65.76%. This decline suggests a reduction in profitability, emphasizing the need for further examination of the company's cost structure. Going to return on assets, which gauges a company's efficiency in generating profits from its assets. Abbvie's ROA increased from 7.9% to 8.4% in 2022, indicating improved efficiency in utilizing its assets to generate profits. Now let's consider return on equity, measuring a company's ability to generate profits from shareholders' investments. Abbvie's ROE decreased from 138.7% to 121.5%, reflecting a slight dip but maintaining a higher level. Lastly, we have price to earnings ratio, which assesses a company's value in stock market. Abbvie's price to earning ratio decreased from 83.6% to 73.8%, indicating a decrease in perceived market values of the company's stock. Abbvie's MD&A highlights a remarkable year in 2022, marked by substantial revenue growth driven by product excellence, increased demand, and strategic business moves. Now let's start with the headline number, the net revenue. In 2022, Abbvie achieved a substantial $58.4 billion in net revenues, representing an impressive 3.3% growth from the previous year. Now, what fueled this growth? Abbvie attributes to it several key factors, some being strong product performance, increased demand for medicines, successful mergers and acquisitions. What does this growth signify for Abbvie's financial performance? Well, it underscores a strong commitment to innovation, the company's dedication to meeting the evolving need of patients and healthcare markets. Abbvie is not only about numbers, it's about making a positive impact on the world. The company has set ambitious goals to reduce its environmental footprint. The company is not just growing its bottom line, but it also contributing to a healthier, more sustainable world. Now let's talk about why I believe investing in Abbvie is a compelling opportunity. Abbvie is not just a pharmaceutical company. It's a story of evolution, growth, and unwavering commitments. From its groundbreaking IPO to its global recognition, Abbvie's journey reflected dedication to pushing the boundaries of what's possible in pharmaceuticals. Thank you for joining me on this exploration on Abbvie's remarkable legacy.